BTC and crypto are about to break the most important resistance level. ETH is slowly grinding higher, forming more and more liquidity above those highs the more time we spend here. The BNB long is developing slowly but steadily. The US stock market is ripping higher and higher and higher. And what crypto majors tell us about this move, all of that in today's episode. Let's go. Hello and welcome guys. This is going to be my last video for the next three and a half weeks maybe, because I start my journey and I'm gonna travel very far through many countries and I'm gonna spend 24 hours a day pretty much outside. And so I'm definitely not gonna sit down there and record a video. I'm gonna be around the Discord talking and sharing about the usual stuff and my positions. So I've brought this chart with me and I posted this on X already. So for those who follow me there already know what this is about. And I talked about this very important support and resistance level. I took a short here, I got stopped, and now I'm looking at this level for a potential flip. And if you look at the daily, we still haven't really taken it. I mean, we could consider this some kind of close, but I'm always seeing things in areas, as you know me. We closed above the 0.5, which is the first strong sign. And every time we get rejected a bit, we simply just grind higher. And this is usually a very strong sign of the market. Somebody is pushing price higher and higher and higher and eating those sellers up. And once we are a good chunk above this area, probably this move will accelerate because we will then liquidate even more shorts. And people start panic buying into the move. Can update this a little bit. And now let me explain what the rest of this chart means. This is my old position. Obviously, I shorted the top here, you guys know. Usually I have some kind of proof here, but this time not, because the chart is already very crowded. But if you follow me for a while, you know, and I posted the proof on my X post as well. So what all of this means, like those lines here, I marked those lines as liquidity lines. You can call them parabolic lines, you can call them trend lines if you pull them differently. Whatever you want to call them, the main thing is that every time we do a move like this, like high highs, high lows, high highs, high lows, we create liquidity below those lows. Why? Because people start longing into this move, longing those minor pullbacks, lower time frame stuff, or even buying higher time frame because they're fear missing out and they were not brave enough to buy down here. And this means below all of those lows, liquidity is forming, because when people take positions, they usually also have some kind of invalidation, many of them at least, and especially those that remain now in this stage of the cycle, because everybody else is probably already so wrecked they don't really touch the market anymore. So we can consider that many people have invalidations, and where do you put an invalidation? You put them below technical resistance. And in this case, those lows are perfect for that. And also this major low obviously has the biggest amount of liquidity below it, because everybody who's longing this on higher time frames will put the stop below this. Also the 60K psychological key level here. And I marked also the 80K psychological key level and the 100K, which marks the strongest of all. And you see, I talked about this before, but you see how price usually moves around this level and leaves those very important levels behind, which is in this case also, if you consider this our top range, this is our 100K key level and also a support and resistance level of this top range. And so this is going to mark a very important liquidity area. And then we have this high here, front running 100K. And this is also a very important key high, because when price comes and moves here, we maybe front run it for a little while. And then liquidities are forming also above this high, because the same principle applies then on the slower time frame lows here on this one, because when people start shorting this, they put their stop loss above this high and maybe even above the 100K key level, or they even want to short the 100K key level, or they even sell it. And so a spike above this high and then a rollover makes perfect sense. Should we able to reclaim the current level, and should we able to move through this big supply area here? And all of that said, my usual strategy is, as you guys know me, is not to predict where price will exactly go. If you hold a gun to my head and ask me what's the most likely outcome from here, once we flip the level, I would say it's probably something like that. Why? Because this should we flip this level? So this is the bullish case, right? Should we flip this level? Price will move higher. We will grind around here a little bit to create this liquidity I was talking about. Then we will probably take it with a very quick move, and then we will push lower. Because at this point, many people will pile into the market. BTC is at 100K. You will see it all over the news and all that. So this is my bullish case for now. And from there, we have to assess if this is like just a rollover and then moving lower aggressively into maybe even lower targets. But then again, we take it level by level because the first important key level is then this. And this is just the bullish case, right? So if we now remove this again and we say we reject from here and I was just shorting a bit too early or too tight, and we do something like this here, it's also no problem for me because I took a defined stop for being short here. And now if we start confirming lower highs and lower lows and break this liquidity line here, break momentum, I can still re-enter and put my stop above this high. And that's really the beauty of non-predictive trading, because I can prepare for this, I can prepare for this, and I'm also prepared for potential upside because you guys know I'm short ETH ever since the February lows. And so this is already in significant profit. And I didn't TP because my target was not reached. And I also see a reason, if BTC does this move, there is a good case to be made that altcoins are performing even better, because looking at ETH BTC and stuff like that later on in the video, there is definitely potential for altcoins to rip. The sentiment is super bad. And so I'm preparing for this via those longs. I also took the BNB long. I talked about why in the Discord. It reminds me a bit of those stock plays, and BNB looks a bit more like a stock proxy for Binance. It's not the usual very ugly looking altcoin chart. Like look at Litecoin, for example. I mean, it's obviously looking way different. But I also took a long here based on this lower time frame price action here with a very tight invalidation of 3%. So the RR is quite good, and I'm taking my chances here because I see this upgrind here. You see this the same thing I was talking about on BTC, just that we didn't take those highs yet. We get rejected quite often, but every time we reject, we simply fill the wick and we grind higher, and there's so much buying pressure right now. And above those highs is probably sitting a lot of liquidity. And so I see a good case that ETH is pumping into this, filling this FEG before continuing lower. And from there, again, it's the same story as on BTC, even though there's not so much details. This is the first resistance level, and only looking at BTC is sitting right here right now, right? So if you look at this again, support and resistance level here, 80K key level. For ETH, it's here. It's not at a psychological level, at least not as far as I'm concerned, maybe 2.5K, but it's down here. So it's a support and resistance level, and it makes sense to TP here, especially if you bought the February lows. But at the same time, it doesn't mean we need to reject here. It's just a support and resistance level. You can trade around this level, you can structure ideas around this level, but we can also teleport higher and taking 3K here. So similar structure, but it will probably not look exactly the same, simply to confuse people, simply to make people think they understood it by looking at BTC and ETH is going to repeat that. It's probably not going to happen exactly like that. And see the chart for what it is: structural resistance, supply, psychological key levels. The same thing applies, even though I did not spend so much time to make the chart look fancy and add all of those details. And again, another thing why I drew those liquidity lines is look at how a usual bottom forms. And this is not true. This is not just true for the range I have shown here, but also true for all major higher time frame reversal lows. So first of all, sentiment is super crappy, which maybe was true when the war was on, but it's definitely not super crappy anymore. And second of all, usually we have some kind of undercutting the low, taking the liquidity right before right before the strongest reversal hits. And you see this is also true for those minor reversals. And here for this external reversal, we have a high here, taking this all-time high. We take it again, we take it again, and we take it again. And this feels super horrible. In this case, obviously it feels super good because it goes higher and higher and higher. And this makes people think, oh, the uptrend is continuing, we're taking this high, it's going to go higher and all that. And this is why 3 drives actually work. And I'm preparing a post for that because the new 3 drive, if you look at the 3 drive from a textbook perspective, it always looks a bit symmetrical. But if you look at the reality, it's usually not that, because this could be considered a 3 drive, right? 1, 2, 3. Then we have here 1, 2, 3, or if we consider the external lows, 1, 2, 3, or these three, 1, 2, 3. And why is this happening? This is not happening because market makers look at it in a book and say, oh, I'm going to apply this now. They want to create liquidity. And once people understand that 3 drives are a thing, obviously it doesn't work as well anymore. And so they do something that it doesn't look like textbook. And for this reason, they just make it asymmetrical, like having a bigger distance between those highs. So people don't look at it as a 3 drive anymore. People learned in the previous cycles, looking at higher time frame, oh, double tops are a thing, obviously, and they understand maybe on a deeper level that what double tops mean, like taking the liquidity above the high, creating the impression of a continuous uptrend. And so market makers just came up with something new because the third drive feels like, oh yeah, the double top gets invalidated, you know? And then people buy and people think it's gonna go higher. And so what I mean by all that is simply that these patterns are not working because they're in a textbook and everybody knows about them. They work because people don't know about them and don't apply them. The best patterns don't look like those textbook patterns. And so they change that. And now look at those lows here. This is like one big liquidation spike, and ever since then, this low is protected. So I would consider it now unprotected because everybody who's taking higher time frame longs here has their stop probably below this low. And once this is taken, the higher we go, the more liquidity is forming below this low. And this is very, very important because that's the reason why those patterns are much stronger, even if it's just a double bottom, because they take the liquidity. And we have this big low here. And usually after a while, it will resolve to look like something like that because it goes higher. People think like, oh yeah, it's going to go higher and everything. And then the liquidation cascade hits. And you see how aggressive the move gets once we approach this low because people get liquidated, people panic sell everything, and then we form a new low. And if this is a genuine higher time frame reversal, and by that I mean like prolonged uptrend for the next year plus, I'd argue that we have to accumulate a bit more, and that I'd argue that we probably take this low. I don't think that that this really is the higher time frame low, but let's imagine it is. It means we should take this low one more time, or at least go close to it. This doesn't look really like a higher time frame reversal to me. This looks like this up grind, this liquidity grab, even though it could obviously go way higher than that. Eventually, we will take this low. And once we take it, we can assess if those lower levels are in play. And I still think they are, to be honest. Another big thing on this chart, we spent actually a lot of time on this chart already, but I think it's super valuable because if you know what's going on BTC, you will understand a lot better what's going on altcoins. Another thing I said was, should we take this low? Should we really like flush it? I will TP into this flush, probably looks something like that here, on all of my shorts and remove extensive funds from exchanges, because I think once we really do this, the most dangerous part of the cycle has begun, where they figure out all the money that should be on those exchanges might not be there anymore. Things are breaking. Forced deleveraging usually always leads to breaks in the system. In TradFi, but also especially in crypto, because yeah, regulations were missing for years, and so there is lots of shady stuff going on. Talking about shady stuff, let's talk about altcoins real quick. As said, still long here. Seeing something similar than BTC forming this liquidity line here. Would be surprised if ETH could form a sustainable rally from here for the next few years without taking this low again. But time will tell. I'm positioned for that anyway. BNB, not much to say. If you joined the Discord, you know what's on. And Litecoin, something I didn't talk about in the Discord, lower time frame trade. Yeah, going in my direction. Not big in risk, but I see definitely signs that we will probably push higher from here. And the US stock market is confirming this somewhat. I mean, we will not go up forever, but the momentum is still just not fading. It's just going higher and higher and higher. And yeah, it might be complete madness. There is maybe not even a logical reason to explain why this is. I mean, in the end, it's just because people buy, because fresh money is flowing into the market. We reshaped out of here. And as long as this momentum is continuing, I see a very good chance that we will not see as much bearish price action as I originally thought this year, at least not until proven otherwise. And so I'm prepared for this upside. And I'm prepared through Microsoft and Amazon. I took a stop loss, probably the worst stop loss I've ever taken. It was still just 1 hour, so my risk was still all right, but let's talk about this real quick because it was so mad. I went short here. It nuked 7% from my entry, which is good, but I was in bad, so I couldn't really take profits on nothing, because otherwise I would definitely have taken profits here after such a drop and move my stop loss to break even. And then after market, I was still asleep, right? We pumped 13% above my stop loss because my stop loss was here. We pumped above it, and then I thought I was stopped, but I was not, because it was after market. And then the market opened here in this little gap, you see, opened within my stop loss. And so I wasn't stopped, and I said, okay, I was willing to pay this stop, and I wasn't stopped. And then I got stopped with this move here, and then it nuked again. So from an emotional perspective, it was wild, and I've not experienced something like this for a very long time. But hey, in the end, I paid my very defined stop loss. The idea technically would have worked if I would have been awake, but hey, can't catch them all. It's all right. And for now, I'm not touching it again, because as mentioned, strength is incredible for the US stock market. And I'm not gonna jump in front of that train again until I have further confirmation. Talking about stocks, we have taken a lot of longs in the Discord. Just that you see, we have Novo here. All of those setups are shared live before trading this for a little while again already. We have PayPal here. Let's pull up the chart because PayPal did something interesting yesterday. I was talking about PayPal since December. We had this big nuke. I started acquiring a higher time frame position. Where is it? Oh, did I delete it? Okay, then let's look at the Discord. You see here, higher time frame position now. We have a 10% drop into this demand zone. I added to this wide position, but I also added some risk to the same idea pretty much, but with a tighter stop loss, which allows me to buy more shares. But at the same time limits my risk to this, because if we go to the lower end of this range, I don't wanna like have this full position going against me. And so you see there is a win-win, because I can buy more shares and my risk is better defined. And that's why I decided to add some to the bigger one and add partially to a tighter one. And so far it's looking all right. See, we bounce from this area, so I'm not surprised. Now let's see how things are going. And it respects support and resistance levels super good. And so I would argue that this whole area here around the $60 mark is a very important support and resistance level. And the volume profile is also confirming this. And so while I target this as best case, I obviously going to TP much earlier. The RR is already super high for a position like that. But for now, let's see if this is even playing out or not. The whole company is still doing the same thing. The whole company is still profitable. Millions of people using PayPal on a daily level. So nothing really changed from here. But now the stock is 85% cheaper. So I'd argue, if you like PayPal, if you use it, if you think PayPal is something, there is now a good opportunity to get some exposure here. Wheat. I talked about wheat in the last video. We had a significant pump ever since I entered first. I mean, 20%. That's a lot for a commodity. And I TP'd 33% simply because we rejected from here. And since then, we went down 6%. And now I see a good chance that we go for those levels again. We will see. I will not allow drawdown, obviously. So my stop loss here is at break even and the position is already profitable. If it goes higher, it will finance me buying bread in the real world, which is good. Soybeans still grinding higher somewhat, making higher highs, higher lows until proven otherwise. Still happy with this position. Now, as promised, crypto majors, interesting things going on. I'm not talking about them every week because sometimes there's simply not something happening. And USDCD, I talked about this simply because the volume is so high now. And I would keep that in mind because it means something is changing in the background. Not saying this means something specific, but I would definitely keep an eye on. And if something specific happens, we are not surprised. So now going down ever since here, 16% down. Once we come here to this key area, I would argue that it's wise to either look for shorts or TP on crypto longs, and it will probably align also with with ETH being something somewhere here, and similar looking here at USDT. Once we come down to this mid-range section, which marks pretty much the most important support and resistance level ever since 2022, you see how this flipped here, reacted again, reacted again, reacted again. Now we broke it. We went up to this extreme range high, to this extreme supply. We rejected from here as expected. And now the best case is for now is here. And should we able to break this down, we can consider lower targets, which would be down here. But as said, I would definitely have an eye on this area first. And once it hits, I would take some profits, look for shorts, be more on the sell side in crypto. We have BVol. For those who've not seen my deep dive, it's on my X page. And it's pretty much simply every time we hit support or resistance, we hit an inflection point in the market. You see here, early March, February, we hit the red box. You don't have to be a genius to remember that this was a good time to be on the buy side. And now we are already back at the green box. So should, for example, the BTC level we talked about hit and BVol hit at the same time, you have great confidence that there might be a change in program from buy program into sell program in this case. So that's why you should keep an eye on that. ETH BTC is back at this higher time frame breaker block, retesting this local demand also. And so should we get a reaction from here, first target here, 10% outperformance of BTC, second target here, and if you can flip this, obviously higher targets are on the table, but taking it level by level makes sense. And we have EVOL 7-day, which is similar to BVol, and every time ETH hits this down here, there is a big increase in volatility for ETH, and so we are quite some time in this green box already, and yeah, study this chart yourself. Every time we went down here, close to this box or touching it, it was a very interesting volatile time for ETH right after. And for those guys who follow me on X as well, I shared this very extensive post about my whole journey because for me now there's a new chapter, a new dawn. I'm leaving this house here after 2.5 years. I spent a lot of time grinding in the markets, a lot of time creating content, creating value for you guys. And if you click on this post, it's my pinned post, you will find, first of all, why I do social media, how I did it, and also what the new chapter means for me. And then below that, you will find everything I've shared so far, everything valuable I've shared so far. So I made a lot of smaller posts in between as well, obviously, but this is everything I did. And you see, this is a big library of knowledge. So I did that because you guys gave me 10,000 bookmarks last year only. And this showed me that people value my knowledge. And I know people have often limited time, family, obligations, work. And I want to make it easy for you because I'm running my own journal. I have all of those links saved. And so I put them all into proper categories, made this post so you don't have to search my whole timeline. You can simply use that, click on those links and come to the right knowledge you seek right now. And as said, I categorized all of them. And so if you're interested in my trading strategy, if you're interested in what I learned in those 2.5 years and in everything I shared, I've built this really extensive compendium, which I'm very proud of. And here are some of my first posts. So for those who want to see how I started this journey publicly, these are some of my first posts. This was what I did from the very beginning, pretty much. And obviously my whole posting and content creation got way better. And this is also the reason why I decimated the study area here a little bit. As you guys know, this Discord was a paid Discord before, and we had this extensive study area, where I sometimes share some of those posts here. But there's also a very essential overview about what trading really is and what you need and what you definitely should know before you take your first trade. And this was a very, very big study area. So I removed a lot of the content because it's now on my X page and it's even better categorized, I think, than here. It makes the Discord a little more handy, but there are also things I haven't shared before on X. So if you're interested, the Discord is free. The link is in the description. And for everybody joining the Discord, you will find also a WAP link to my mentorship program, the Market Operator, which is now at a 35% discount because I want to celebrate my new chapter, a new beginning in my life. And we have right now 4 spots remaining. I have to work through the list. And if you're interested, look at the reviews. They will tell you exactly what to expect. It's not selling bullshit. It's not a copy trading. It's not a trading community. It's a real mentorship program where I can help you to make real progress if you put in the work, if you're honest, if you reflect with me. So don't expect wonders. As said, the reviews are actually pretty precise on what you should and could expect. So that's it with this quite long video. I wanted to spend some time with you guys, talk about all my thoughts, all my theses, and everything I have planned for the next weeks. Simply because for me now, having not as much screen time, having a volatile life, having not the time to plan and think a lot, I make my plans beforehand. I sort everything out. I sorted my journal. I pretty much closed this chapter by completely reviewing and sorting everything out. And I did the same thing on my charts. You see, I've spent a lot of time on this chart, making my plans so that when I'm on the journey, when my life is volatile, when I don't have as much time to spend on the charts, I have my plans predefined. I just have to execute at those levels. Don't think about it too much. And that's exactly how I want my life to be. And if your life is pretty busy, you should do the same. Spend some time every week, every second week, every month to map out your most important ideas. And then there is no analysis paralysis once the market get hectic and you don't have the time to sit there because you have a predefined plan. You have everything mapped out and you just wait for price action to come and confirm your ideas, and then you execute on those predefined levels. That said, guys, thank you so much for supporting this channel. Once we hit 1,000 subscribers, I will start implementing live streams on YouTube. Until then, I wish you a great May. I wish you a great start into the summer. We talk after my journey when I arrive at my new home. Have a great time. Bye.